G'day, listeners, and welcome to another episode of the Scouting Australia podcast, powered by Australian Broad Scout by Zanzi. I'm your host, Sammy Gordon, and today, guys, it's funny because this is the second recording in the Melburnian studio, but this one will be going out before the other. So welcome to the Melbourne studio.
Hey, welcome, Sammy, to good old Melbourne. You brought the rain. It was sunny yesterday. As soon as it saw your mug, it started to rain. It's a bit windy.
Mate,
nice
people hear the whole story when they hear the podcast drops in a week or two. This regards to in a different podcast episode. That was actually the first time we recorded in this room earlier today. The flight was late. The weather's shit. Jimmy's hair's still shit. Actually, it's going back a bit, mate.
It's going back.
Yeah,
well,
it's back. I prefer it. I prefer it.
Do you? You like it?
Were you skinhead before? Like, I don't know. You like trying to be a gangster? You're not a gangster. You know? Like,
Producer said she liked it either way.
Yeah, because she doesn't like it also either way.
So it's good to have you here, Sammy, in Melbourne. How's Melbourne treating you thus far?
It's been fine. It's been fine. You know what? Actually, the Uber setup at the airport was mad. Like, dude, you just go there, you just walk up. There's Uber's waiting. You just hit it and just walk.
How good is
That's
it?
mad.
In the Gold Coast, you are literally waiting 20 minutes and they cancel on you last minute.
Because they're driving from Melbourne to here. No, seriously, man. I don't know. That was cool. That was cool.
Good setup.
Good coffee. Had a nice bacon and egg roll while waiting before we jumped in.
You did. Well, you had bacon and you had a fudge brownie and you had some yogurt and muesli and you had a salad.
Salmon salad. Yeah, it was good feed. Yeah, it was good. It was good.
Good feed.
It was a light afternoon snack.
Yes.
So, mate, good to go. Good to go. Ready to roll. This will be the first ep dropping in the Melbourne studio. The actual proper first one will drop in a couple of weeks. But, mate, this one is very, very topical today. We're talking about will grants for the housing market.
You know what? I know when you're serious when you bring the laptop. Because it's very rare do you bring out the heavy artillery, isn't it? So,
it is.
So this must be a really important, a very important podcast.
And I have got a massive laptop. It's a whopper. I don't know why I have a laptop this big, but I got, what is it, a MacBook Pro.
Matches your head.
Anyway, moving on. The reason for the laptop, mate, really comes down to the breakdown around everything to do with the government grants.
100%.
As of recording, I think in a couple of days we roll over into October 1. We're dropping this, I think it's October 5th or something like that, Monday next week. Pretty much breaking down everything to do with it, guys. And is it going to put undue stress and pressure on the market, or is it not really going to have that much of an effect? So that's what we're going to be talking about today.
There's a lot of talk about this, Sammy.
Heaps, man. Heaps.
Everyone is talking about it.
Yes.
Experts are weighing in on it. Most of the calls that I actually have on the front line, they're all, I need to rush in before the scheme's coming in. So there's a bit of uncertainty. No one really knows what the impacts are going to be. So I'm curious, why don't we kick it off, Sammy? Tell us what is going to be implemented, essentially.
For sure. So what I'll do first, give you a bit of a breakdown. We'll talk about some expert commentary. I'm going to put that in inverted commas because it's some very contradicting information, this expert commentary that I'm not the biggest fan of. But guys, effectively from October 1st, 2025, the Australian government's, they're bringing in the first home guarantee, right? So effectively what it is, eligible buyers will be able to purchase a home with a 5% deposit, and the government is going to guarantee the remaining amount to eliminate the need for lenders' mortgage insurance.
15%.
They're going to guarantee it, right? So just the LMI component. So effectively, you don't need to pay the LMI component, right? And so LMI, so lenders' mortgage insurance, is a cost that you typically spend and you pay, and it covers and it protects the banks. It doesn't protect you. It's a lender's mortgage insurance, but it's typically quite hefty, especially 95% LVR. Back when I was in my early 20s, I bought a lot of properties at 95% LVR because loan to value ratio, because I didn't have enough of a deposit, and I was trying to scrimp and save and get everything as I could together to keep moving forward with deals too. So the real difference with it this time around, though, the way it's going to be done is it's increase the property price caps. Right, so the increase the caps per capital city, per location, and there's also no income caps. Right,
okay,
or limited numbers on the places available. So it's unlimited places available, unlimited income caps, and the property price caps.
But it is for first home buyers, right?
First home buyers, yes. So first home guarantee. So effectively, what we're going to cover off today, really, man, is just everything to do with. Obviously, we've covered off what it is. Obviously, starting a couple of days ago, when you're listening to this thing, you need a 5% deposit to buy a home. Government guarantees the rest. So you're still borrowing. The key thing here as well, guys, you're still borrowing 95% of the loan. You're putting the 5% in. You just don't need to pay the LMI component, which can blow out to 20, 50 grand, depending on what that purchase price you're buying as well. So you're still borrowing the 95%.
Okay.
So a lot of people think it's not. It's an 80%. It's not. You're borrowing the 95. They're just covering. They're going as guarantor, so you don't need to pay the lender's mortgage insurance.
Okay. So your repayments are going to be significant, right? You're borrowing 95%.
Yes.
That's still decent.
Yeah, for sure.
Is it just, it's not on just brand new homes, it's for any dwelling, right?
It's everything. Yeah, okay. It's everything,
Got it.
man. And so this is the real difference around really kind of how it has been at play before with a lot of government grants, which typically are state grants on new homes as well. This obviously being the federal government's play across the whole market as well. Now, so the only final thing to probably break down within this as well, man, is the caps and what they've increased to as well. Now, some of them are massive, man, like massive increases. So New South Wales to Sydney originally was 900,000, but as of the 1st of October, now 1.5 million. Vic, so Melbourne, increasing from 800,000 to 950. Queensland, Brizzy increasing from 700 to $1 million. So Brizzy now actually increasing more than Melbourne, man.
Crazy.
A higher cap than Melbourne, which is funny because originally it was 700 and Melbourne was 8. Now Melbourne's gone 950 and Queensland's gone from 7 to $1 million. So crazy, man, showing the growth that market has had as well. Trying to, help first-home buyers get in. Perth has risen. WA, capital city, risen from 600 to 850. SA has risen from 600 to 900,000. Massive for Adelaide. Tassie increased from 6 to 9. ACT from 750 to $1 million as well. So ACT's massively rocketed. And the NT, little old Darwin, stayed the same, 600 to 600. So very, very interesting, man. Like some huge increases there. And I think it's showing the growth I think that's been had over the last few years as well. But it's also like it's going to be very interesting to see what happens to the bottom ends of the markets in these different cities because you're effectively now opening up to these guys and girls being able to go in, smaller deposit, no LMI. Like a lot of people earlier were trying to save their LMI components as well. So now, man, we're going into that different territory. They try and save and not pay LMI and save their way. I'm not a fan of it, but where a lot of people were trying to save themselves to a 10, 20% deposit, now they can get them with that 5% deposit, no LMI, and these massively increased caps. Yeah, some of these things, man, like Sydney from 900 to 1.5 million.
That's an incredible increase.
600,000, man. Queensland, bloody 700 to $1 million. That's massive. Huge increases, dude. So, even Adelaide, like 6 to 9, Perth 6 to 850. Like they are massive increases in those locations as well. So, Matt, I think it's. We'll dissect a little bit more around that in a second. But so there's a lot of commentary sort of coming out around this thing as well, man. People making the statement, and I'm pretty vehemently behind it as well. That it is going to have a pretty massive impact on the market, and it's going to be interesting to see. Will it actually fuck it? Specifically for future generations, is it going to cause a serious issue, around price points and where they've now set them? And the biggest thing to take into the equation is whenever the government plays with housing policies, almost always prices are seriously affected. And so, man, I think this is one of those things, man, and it's like prices and rents. It's one of these things. They like to try and play around with these things and try and play God in these scenarios. And at the end of the day, man, so many of these things have been so long-standing that playing with any of it, it's like when they talk about the negative gearing reforms, all the rest of sort of thing, playing with any of this stuff that's been around for 30, 40 years is just silly. And I don't think this is any different. Bringing this in, especially at a time where we are in such a housing crisis as well, price growth has been so substantial. To bring something like this in now at this point in time, it just seems it's a really weird time to sort of bring it in. Like, yes, there's housing crisis. Yes, younger generation finding it hard to get into the marketplace, but the market is already seriously constrained and constricted from a supply perspective, and all they're going to do is increase demand on that tiny supply, which is going to put pressure on house prices. So, man, I think like it is going to solve a very small problem for now for a very small number of people, but it is going to have a flow-on effect to the housing market. The other thing that like they don't think about and actually factor into the equation is the fact that investors also look at this and go, oh yeah, sweet, well, impending price growth is going to come because of this, so I'll get into the market before it happens, or I'll get into the market into these locations because I know that it is going to have this impact on the market in these locations because it has a strong first home buyer demand and that price point fits the brief. All these sorts of things. Before this thing has even been changed and dropped, there would have already been well over 0.5% growth across the whole of the country as a result of what this thing's going to do. So again, I reiterate the fact, government trying to play God with policies like this never ends well.
So essentially, this is a bad thing.
I think it depends on which side of the fence you sit on. For us that are investors that are getting into the marketplace, you can be strategic with this to be a good thing, and be strategic with this to have a positive impact on your portfolio. We're big believers in buying in the bottom end of markets, buying blue collar style assets, lower entry prices, strong growth, strong cash flow, all the rest of sort of stuff. Our asset prices will be positively impacted by these changes.
Yeah.
Right. But outside of that, man, especially for new people coming in, it's going to be a lot harder. Even the first home buyers trying to get in, it's actually going to make it harder for them. Like, yes, they'll save this one piece, but what if they now pay another $100,000 for a property that they could, let's say, instead of paying $900,000 for a property they could have 6 months ago, now they might be paying $1 million for that asset, because now there's all this increased demand for that style of asset, both from investors knowing some growth is going to come from it, and from first home buyers all trying to get in now because they don't have to save that piece and that component. It's going to put additional pressure and stress on the market. It's a natural cause and effect, man. You create increased demand and perceived increased demand. The investors will come in. You create increased demand. More and more first home buyers will come in, which is what they want. But the perceived, effect of it, which will actually come into effect, is going to be from the investors as well, man. So you're only going to create more demand on an already super tightly constricted market as it is in that bottom end, man, and just push that bottom end higher and higher, making it harder and harder for future generations being able to get into the market.
So there's a lot of commentary around, that we need more supply. So
Yes.
What is this going to do in terms of supply?
Well, in terms of existing supply, I think it's just going to deplete it further. In all, pretty much, I won't say all those locations, but almost all those locations that are sub the price points in a specific. Now, then the areas I gave, or the areas that I read out, were capital cities. There's also sub markets that are regional centers, and your regionals of those different states that have different price points as well, will be affected differently too. But yeah, man, pretty much almost everywhere is going to cop an increased level of demand from local buyers that are going to be able to buy into that location.
Would developers just be increasing their prices knowing that people have more money to spend now? Like builders, right?
Developers.
Yeah, like builders and developers. If they know that there's more money being helped, well, there's more help from the government. So is that just going to flow on to them actually just increasing their prices as a reflection of that?
Well, man, it depends on where the actual they still have to buy it, right? So they still have to actually buy it at that time to be able to get through it. But in time, yes, 100% it will. So what will happen is they won't just naturally increase prices. What will happen is a certain amount of stock will get eaten at a certain price, bump it up to a new price. If it gets eaten, they do it again and again and again. Or they'll just try where they think, and then they'll just whittle it down to where people will actually pay for that stock as well. So yes, 100%. Like, it will increase pricing across all assets.
Okay. So let's put two hats on here. If you're
all assets at these budgets.
Yeah. Yeah. So I want you to there's different people listening to this podcast. If someone is listening to this and are purely a first home buyer, what advice would you have for them?
I'll answer your question, but I think the reality of the conversation is more around from an investment perspective, right?
Okay.
But I'll answer your question in terms of any first home buyers that might be listening. Always, always, always buy with investment in mind, right? So like, until you can afford to buy your dream home, I don't buy the primary residence. If you've got the ability to get into the market and you can't get into the market with anything other than the first home buyer, deposit scheme at a 5% deposit with no LMI, and that's your foot in the door, great. But be strategic. If it was me, I'd be being strategic about it. So if I lived in Brisbane and I couldn't really afford to live in Brisbane, it was going to stretch myself to an absolute capacity and the market was pumping, where could I potentially buy, on the outskirts that may have some flow-on benefit from these grants and from potentially a little bit further growth in Brisbane or something like that may fall into the regional band that might have some additional growth or pressure from that side of things as well. Like, that's probably more what I would be looking at, rather than like maxing myself to the hilt just to buy into Brisbane, just to take advantage of the grant. But man, I think it really comes back to like, what do you have the capacity and the capability to do? Now, if you have the capacity and capability to go buy somewhere else and take advantage of that, and have enough of a deposit to go buy somewhere else, and somewhere that would potentially be a better growth location than, say, a Brisbane or a Sydney or something, than just trying to take advantage of the grant, I would always be investing with the investment in focus.
Yeah.
Not focusing around, well, I can take advantage of this grant. Because I never invest based off grants. Like, I would never invest based off grants if I was utilizing that grant, right? But I would invest where I think he's going to benefit from the grants.
Yeah.
If that makes sense.
100%.
So like, being targeted with where you think he's going to see the most growth and the most benefit from these things coming into effect, that is first and foremost what we need to target as an investor. And that's what I think everyone should be targeting. And whether there's someone that is a first home buyer taking advantage of the grant because that's what they need to do to get into the marketplace, that's great. That's sweet. Happy for you. Like, this is your foot in the door for something. But be strategic about it.
Yeah.
Right? And so if probably something I'd say as well is if there's someone in a different capital city listening to this and they're first timer, but they don't actually have enough, and you're in school of property, bring that question to the next Q&A or bring it to the bloody boot camp or the summit or whatever, and I'll go through it with you guys on, if you're in the capital city, where would I probably buy on the outskirts that potentially might help, might be a beneficiary of what's going to come through this growth.
So the fundamentals of reinvesting are still prove correct regardless. So it's important for people not to get seduced into thinking this is your savior to make you wealthy, right? Because if you think a few steps down the line, whether you use this grant to actually get into the market, what is the next move? Because your serviceability is going to be pretty much shot. You're going to be borrowing 95%. So you're going to be stuck.
That's not necessarily the case, man, right? So you're looking at it thinking, well, 95% means you're going to get stuck, right? Your words. 95% is for people who don't have enough of a deposit. So you could be making $1 million a year, but only have $100,000 in your account. And it might help you get into it. So from a serviceability perspective, you're sweet. Yeah. So for myself, when I was starting out, I was a low income earner and my serviceability wasn't great, but I also had bugger all bloody deposits. So I was using it, but I was targeting very high cash flow assets. So I was buying bread and butter deals with 8% yields so I could retain my serviceability, but still use 95% lens. And yeah, man, that allowed me to keep moving forward. So it has nothing to do from a serviceability perspective. In all reality, it's everything to do with the deposit. And I think like the really key thing to note is I would only be utilizing this if from a deposit, as a first home buyer listening to this, I would only be utilizing this if from a deposit perspective you had no other alternative.
Okay.
If you have no other alternative, bring the questions to the table. That would potentially be a beneficiary of this and be able to take advantage of it. But if you got the deposit to invest correctly outside of using this grant, then do that because you're going to be able to scale the portfolio more quickly and move forward from there.
Now, let's switch gears then. From an investor's perspective, there's a lot of chatter from a lot of clients that are getting on the calls. They're nervous about what's going to happen to pricing and they feel like a bit of FOMO that they need to get in quicker, sooner rather than later because they're going to miss the boat. What would you say to them?
Man, I think in all reality, there's a very simple thing, and that there's something called a house price to income ratio. And so there's still only a certain amount that people have the ability to pay in a certain area. So there are different areas that are definitely going to benefit from this and benefit from it quickly. But I think that's going to be a limited number of locations. I also think a lot of locations around Australia right now are pretty close to being fully capped from an income to house price ratio. So it's just being super targeted with where we'll actually benefit from it. It also really depends on what capacity people have. Are there natural drivers in a location as well combined with this, because like this isn't going to be the pure precursor to everything having ridiculous growth, right? It will definitely, it has the potential to put a bit of fire under a few locations. But yeah, man, it really comes down and drills down to where else is, what is it going to help give a little bit of a boost to? It's not just going to, this one thing, drive 30% growth in a location. So I wouldn't be getting too hung up on needing to do something immediately. Like we always want to invest yesterday. You always want to buy as soon as you possibly can. But at the same time, the market has to reach all the fundamentals. You don't just want to go get a pre-proven and buy something because you think the whole country is going to go up in value. It's not going to work like that. And so, man, I think that the fundamentals remain the same. I wouldn't be changing anything from that side of things. But is there potentially someone who's going to benefit from it a little bit more than others?
So keep focus. It's obviously investing is a long-term game. Don't be rushing out making rash decisions. I'm curious from your side, when you look at data like this, does this change in any way areas you would potentially be focusing on? Like, does it weigh into your research in terms of what you deem as an investment market?
Yes, it has. It has. So when these things came out, not all locations, but some locations for sure. There's some locations that we were sort of earmarking for a little bit further down the line that we've actually brought forward in our plans that we think will be a beneficiary of this, and that our clients will be a beneficiary of being actively involved in this, and then that over time it will, pay the fruits from that side of things as well. But we're not investing purely based off that. It's just brought some of our plans forward for some areas too. So, man, I think, I think it's, look, I think the thing to think about here, this is the thing that sort of comes through my mind too, as I stare out at the grey, dreary sky of Melbourne and the crazy clouds. I thought it was a building, but it's a cloud. Is that I do think over time, it is going to really bring about a flaw under the market of the Australian market, right? Of the Australian housing market. If we look at what the current price caps are, if people go and have a look at what they are or what they were before this podcast episode drops, pretty much all of those have been met by the capital cities and where they sit. The median is at or above where most of those caps are now. I do believe that over time, now not all locations and not all asset types, but I do believe that over time, they will find an equilibrium in and around those amounts. So I do think it will bring a floor to the Australian housing market. I think it's done it in the past. I think it'll do it again. But different locations will react faster, and some will be a 10-year burn, could be a 10-year burn. But I think that is a natural floor that will get brought under. A lot of locations will come from this too. So it's it's an interesting thing to sort of contemplate and dissect from that front. And I think the real art in this thing is going to be picking and getting in front of, which I think you already need to do, the locations that will immediately benefit from it, the ones that will be a 6 to 12 month beneficiary from it, and then the others it might be a 2 to 3 year sort of longer term beneficiary, because sometimes some of these locations will need to be combined with other facets, other things at play.
So do you on the flip side, do you think there will be certain property bubbles in certain markets?
No, I really don't think so. I heard some commentator trying to float around the idea of like subprime. This is like subprime lending. I don't think it is. It's too small a portion of the market. And it's also still regulated by the banking sector in terms of income to house price ratios and serviceability ratios. We're not taking away the serviceability ratios. They're just eliminating the need to pay LMI.
Yeah.
That's all it is.
Yeah.
They still have to be able to service at that amount. They're not over-servicing people. We're not talking about investors with the ability of non-recourse loans and, 110% debt on a 10-property portfolio. We're not talking about that. We're talking about first-home buyers having a guarantee on their first home that they're buying up to a certain price cap that they still need to be able to service, which will still be serviced by the banks with a buffer ratios. So that, the talk about subprime lending, it's just eliminating the need for first-home buyers to have to pay an exorbitant amount of lenders' mortgage insurance to get into their first deal with a 5% deposit, 10% deposit. So, man, I think I think Australia is very insulated from the chatter around like price bubble or subprime lending, all the rest of the bullshit, by effectively our banking regulations.
Now, the government's always wanted to get people into their first home, right? So they've tried all sorts of different stimulus and packages and so forth. Yep. We haven't seen anything like this before, right?
Yep.
So the title of the podcast, is it going to destroy the Australian property market? Like, in essence, what would you say? Is it going to make it harder? I mean, yes, it's going to help people today to get into their first home, but what about in 5 years' time? Yeah. What's going to happen to them?
That's what, man, I said this at the start. It's a short-term fix for a small portion of the market. And I mean, there's the thing, but in 5 or 10 years, incomes will have risen, inflation will have devalued, it will you know what I mean? Like, devalue the dollar and everything as well. Like, I think it's one of those things. In time, they'll just increase it again, and more grants will be brought in. The next generation will be helped, and all the rest of the sort of thing. And man, it's all these different things always get brought in at different times and affect different things in different segments of the market and all the rest of the thing as well. And I do think that it will create a disparity. It will create a gap between those who cannot afford to buy now, and maybe cannot afford to buy in the next 12 to 24 months. And those who will be able to buy in, say, 5 years compared to say, the next 12 months. I do think there is potentially a disparity that may come in around that, like a bit of distance that might start to get built. And I think that's going to come from the price point, where that price point gets. But man, that just literally just drills back to becoming a rent investor, being a rent investor, embracing rent investing, and going invest where it makes sense, like rent where you want to live and go and invest where it makes sense. Simple as that, man. So, we could debate all the pros and the cons and like the, who's going to win, who's going to lose and all the rest of the bullshit. But at the end of the day, man, like, it's the fundamentals of the property market and the investing strategy are the same. They remain the same. And these things come and go all the time. Grants come and go. Stimulus comes and goes. This government comes and goes. That
it could change it very quickly, right?
Everything, man. These things can always come and go. And different things will happen in the economy where wind different things back, and it'll be harder to invest, and different things will come in. It'll be easier or harder to get into the market, whatever. It's all natural. It's all part of the game. And all we can do as investors always is play the hand we're dealt and just invest. And if there's places to benefit in this little piece right now, mad, we go out, we benefit from it, and then we pivot, we change strategy all the time, man. This is just the name of the game is being an investor. So, I don't think it's going to fuck the housing market, but do I think it's going to bring a floor under the housing market, a certain price point in a lot of locations in Australia? Yes, I do. But are we that far off that floor in most of those locations at those price points anyway? No, we're not that far off it anyway. So I don't think it's going to change that much, man. It will have an impact, but it's already had the impact from the perceived impact that it's going to have.
Yeah, true.
You know what I mean? So I think a lot of that impact has already come into effect. Yes, I do believe in some locations a little bit of an additional wave. But yeah, man, for me, it's status quo, dude. It's game on. It's yeah.
Yeah, I love it. The fundamentals apply, right? And never has there been a more time where the educated person and the educated money can really capitalize on these kind of things.
Yeah.
So if you are educated and you understand where to invest your money correctly and not get seduced into, as we said before, just short-term wins, you can really make this a massive opportunity for you to capitalize. And that's what we do as investors. You look at what is the opportunity I can capitalize on? How can I deploy my capital? Where are the markets that I can actually get the best return, preserve my borrowing, get into multiple deals, and get the ultimate outcome you want. It's not about just getting into the home today. It's about how do I have financial freedom and be comfortable. This doesn't change. It doesn't change anything. So, mate, is there anything else you want to cover off? I think we're pretty much...
Dude, I think we're good. I think one final point to reiterate, guys, is if you don't need to utilize the grants and you have the ability to invest, just remember, rent where you want to live, invest where it makes the most sense, especially to benefit, say, off these things coming into effect as well. Build the portfolio first and foremost, exactly as Jimmy's saying there. You know, in time, you're going to actually be able to buy your dream home rather than just buy something that you can afford for the first-time owner grant, bloody deposit scheme, all the rest of the thing. You know, all this sort of stuff, guys, like focus on the things that are going to create you wealth over the long term. Build, you know, the ability to be able to buy that primary residence that you really want and build that passive income stream that we're all chasing too. So get behind it, guys. That's the way that I will be doing it. I would continue status quo, business as usual, keep moving forward.
Great. Love it, Sammy.
Beautiful. Jimmy, mate, thank you as always for joining us in the studio for another episode. We're down in Melbourne again. We got the building. It's growing as well, it seems. The blue, that tiny bit of blue slither is getting further and further away in the distance. Listeners, thanks for tuning in, as always, to another Scouting Australia podcast. If you love today's episode, please make sure you send it on to someone else you think might love the episode or take some great value from it as well. And if you're a regular listener and you're loving the podcast, please make sure you jump on. Leave us a 5-star review on your favorite listening platform and hit the follow or subscribe button on your favorite listening platform as well. And Jimmy, thanks as always, buddy. And
thanks,
listeners,
Sammy.
Until next week, we'll see you again on another Scouting Australia podcast.